Hi everyone. Thank you for joining us today for our Managing Risk webinar. My name is James. I'm the Business Development and Sales Executive here at Brew Accounting, and I'll be your moderator for today. I'd like to introduce today's presenter, Joanna Stewart. Joanna Stewart is the Director of Brew Accounting, and Joanna has a passion for supporting small business to achieve mind freedom, time freedom, and financial freedom. She has worked across the globe leading large and small finance functions to deliver strategic business goals. She founded Brew Accounting 10 years ago and has gathered an excellent team of professionals together to support you and your small business to grow and prosper. So without further ado, let's all welcome Joanna Stewart.
Thank you, everyone. So great to have you here, and well done for making the time to go through this really important aspect of business. I guess one thing I will say is sometimes when we look at risks, we start to think, oh my goodness, everything, that the sky is falling in. I think before I even start, let's think about all the achievements that we've succeeded with over the last year, over the last COVID period, you know what I mean? So this is about, yes, let's be really, take a really hard look at our businesses, but let's not go down into a spiral of depression, right? We've done and achieved lots, and we're successful businesses, but this is such an important part of running a business. So the first thing that we'll look at today, we've all heard of the warning of a looming recession. Some days it's scaremongering. Some say it's scaremongering, while others are convinced it will happen. Meanwhile, inflation, interest rates, and the cost of living continue to rise. It's important to look at our businesses now and consider what might happen if a recession does occur. If we don't prepare, the impact could be big. And if we do prepare and a recession doesn't eventuate, our business will still be in a stronger position than it would have been. Doing nothing isn't a risk you should be willing to take. Studies of past recessions have shown that the difference between those businesses that suffered and those that thrived was preparation. If you're unprepared, survival mode kicks in and you may react defensively without analyzing the potential impact of your decisions. We might not be able to decide not to participate in a recession like Walt Disney, but if you decide to prepare for the possibility and mitigate risk in your business, you stand the best chance of surviving and maybe even thriving if it does happen. Before we get stuck in, I just want to throw in our usual disclaimer that the information in this educational webinar is general in nature and no substitute for tailored advice specific to your particular circumstances. We know a lot of you will be worried about what's going to happen over the next year or two, so we put together this webinar to reassure you that there are steps you can take to minimize the impact an adverse event, such as a recession, could have on your business and your family. Firstly, we'll look at the 3 freedoms to highlight the importance of managing risk. Then we'll cover some of the key risk categories by looking at each of the 10 departments in your business. We'll share practical strategies to mitigate risk and how to build risk management into your ongoing business strategy. Risk management isn't set and forget, it needs constant monitoring. You might have heard us talk about the 3 freedoms before. We aim to help our clients achieve more mind, time, and financial freedom. So we like to relate each webinar topic back to these. Addressing risk in your business will help you reduce stress and have more time and money for things outside your business. Often, business owners focus on financial freedom, more profit, more cash flow, and greater business value. While these are all important, if we don't manage risk in our businesses, all 3 freedoms could be compromised. On the flip side, if you proactively identify and mitigate risk, you'll feel more in control and likely spend less time putting out fires in your business. This will minimize business disruption and provide more time, mind, and financial freedom. I just want to have a little moment here to say 2 things. The first one, as I go through and identify different risks, you may think, oh yeah, that's not really important to me, or yes, that's important to me. I'd highly recommend you start writing down the risks that you identify in your own business on a piece of paper, because later on there'll be an opportunity to get our risk profiling document that we can share with you. And then you can use those risks that you've written down to kind of highlight which risks are really important in your business that need some focus. Yeah, I'll leave it at that for now. So risk comes in many forms. By using what we refer to as the 10 hats, we can categorize risk to help determine who is in the business should be responsible for identifying, managing, and mitigating each risk. It's important to understand that the 10 hat structure exists in every business, not just large corporates. In smaller businesses, we often find ourselves wearing multiple hats and managing more than one department. Even if you operate as a partnership or sole trader, you effectively have a director department, which is activities in this department include planning, risk minimization, and setting the strategy to give the owners of the business, which are likely to also be you as well, a far greater return on investment and the ability to sleep at night. While it is the overall responsibility of the directors to identify and manage risk, there are others in the business that carry out the activities that reduce the risk. This point is an important principle of your organization structure, that responsibility and doing are not the same thing. As a side note, if you're not clear on who is responsible for each department, the doing will often revert back to you as owners of the business. So not only is it important to have a framework to identify risk as a director, it's also important to understand what your 10 hat structure looks like. Which of the 10 hats are you currently wearing? If it's more than 6, you probably have a heightened level of risk in your business, which may explain why you aren't achieving mind freedom. Now think about which hats you're doing a poor job with. Make a note to review the hats you're wearing and who you could delegate some of these responsibilities to. Over the next few slides, I'll share some common risks along with mitigating strategies across the 10 departments or hats in your business. Of course, there's no magic bullet for risk management. It's important to constantly and consistently monitor the potential risk in your business. We keep a close eye on risk in our firm using a risk management framework, and we'll show you how you can do the same. I guess for me also, one thing that's really valuable with doing this regularly is it also helps you sort of focus on what's the strategy in my business right now and what are the risks in my business right now. Because if you had spoken to me, a few years ago, I was in a high growth stage of my business, and therefore, acquiring new clients and it was really a big strategy that we had. And then there were certain things that we needed to measure and the risks around that delivery to introduce new clients. I'd say now our focus has been, to really focus on the clients that we're currently serving and making sure that we're doing a good job there. So the risks with that are different. So my risk register looks different now than it did, a couple of years ago. So that's why it's really important to be doing this alongside your strategy piece regularly so that you know where to focus your energy, because the risks change as the strategy changes. So, as I said earlier, strategic risk sits squarely on the directors. We often refer to this as working on the business. Creating time to identify strategic risk in your business is the first step towards mitigation. These are common strategic risks. Directors are answerable to the shareholders of the business, and it's their responsibility to ensure the business plan is executed and strategic goals are delivered and achieved. They must also ensure the business is appropriately structured and manage the senior team members to avoid burnout while implementing the plan. Litigation is an expensive risk and can usually be prevented with proper planning and risk assessment. Protecting patents is essential for business conducting research and development, and personal guarantees should be carefully considered before being offered, with proper advice being sought. One risk I'm really hearing in this area is about burnout, burnout of the directors, burnout of key people in your organization. And so that really does need to be on your risk register and make sure that you're mitigating that with self-care, or, if your team members are getting adequately time to rejuvenate. So these risks are likely to have the most significant consequence if they're not managed. We've only listed a handful of the potential risks here. There are likely numerous others requiring your attention, and it's important to identify the risks most relevant to your business. While it's the responsibility of the directors to ensure the business plan is executed, it's up to leadership, for example, the CEO or general manager, to implement the business plan. They need to identify and manage bottlenecks and roadblocks, engage the team in the plan, and monitor and report KPIs to ensure the business is on track to achieve the plan. Culture comes from the top, and it's the leadership's responsibility to promote a strong team culture and demonstrate the business core values. Recent times have highlighted risks to manage in this department. Lockdowns, supply chain issues, and changing market conditions have rendered some businesses unable to provide products or services, causing them to pivot or close down temporarily or even permanently. Aside from lockdowns and economic slowdowns, an inappropriate mix of products and services could mean that cash is locked up in work in progress or obsolete inventory. Some products or services might not actually be making a profit. If you're not back costing projects or calculating the gross margin on each product, this could have a huge impact on your bottom line and cash flow. If you're not undertaking market research, how do you know what is your customers and prospects want or need? The lack of research might result in too much or too little in new products or services. Do you need to move some investment into enhancing your existing offering, or do you need to focus on investing more into new products or services? We've seen how important it is to respond to changing market conditions. This is a key risk to manage. You can't anticipate exactly how the market will behave, but you can have processes in place to respond quickly to the changes. The operations department is responsible for generating cash by managing the day-to-day running of the business. Some businesses have inefficiencies in how they operate. For example, some businesses could downsize their premises to reflect their hybrid work environment, or a cafe or restaurant with large premises may be more profitable operating from a smaller location with a bigger focus on online takeaways. Fixed assets and infrastructure can be a huge expense for businesses, and it may be better to lease vehicles or plant and machinery, or contract out aspects of the business operation. A classic example of this is a building company that only do sales and project management and contract builders to do the building work to reduce their risk. It can also be less risky to lease assets such as vehicles and plant instead of owning them. Keeping an eye on what the competitors are doing is also important. You don't want to get left behind in your industry. Consider doing an annual competitor analysis, or even visiting competitors for some mystery shopping. For many businesses, IP protection is a big risk. Do you have a strong license agreement or terms of use for customers to ensure you protect your IP? Not managing operational risks can have a big impact on your financial position, as well as causing frustration and burnout within your team. The number one cause of business failure is insufficient cash flow. Even profitable businesses fail due to not having enough cash. Having access to enough cash is a key feature of risk management. We're not talking about having large cash balances, as this is often not possible for business owners. We need the right balance between cash and access to credit. By de-risking cash flow in our business, we will be in a stronger cash position to weather any future storms. Bear in mind that freeing up cash flow is something we can provide targeted support for. Let's look at some practical ways to free up cash in your business. So firstly, reducing debtor days. Debtor days is a measure of how long it takes on average for your customers to pay you. This should reflect your terms of trade. For example, if you have a 14-day payment terms, your debtors days should be, less than 30 days. If they're higher, there's a key opportunity to bring this down. Think of how much more cash you'd have in your bank if customers paid a week after getting the invoice instead of 4 to 6 weeks. The next one, what about reviewing your supplier terms? You should also review the terms you have with your suppliers. If your customers are paying you for 4 weeks, but you have to pay your suppliers in 7 days. That's a big delay between when money goes out of your account and when it goes into your account. Make sure you're taking advantage of any prompt payment discounts from suppliers. What else can you negotiate? Reduce stock and work in progress. Having money tied up in slow-moving or obsolete stock is highly risky. Likewise, if you're slow to invoice your work, you run the risk of not getting paid the full value for work you've done. Review your debt structure. Having too much debt in overdraft or credit cards can put a real strain on cash flow. If you're constantly in overdraft or have credit cards that you can't pay off each month, it will be cheaper to refinance these into a longer-term loan with a lower interest rate. Your personal budget. Not just important for your personal finances, this also determines how much you need to draw from the business. If you can revise your personal budget and tighten it up, you might be able to reduce your drawings and free up cash to support the business and build up a stronger cash position. We know this is tough when the price of everything is increasing, but hopefully it will be short-term pain for long-term gain. And finally, when you've reduced your debtor days, reviewed supplier terms, reduced your stock and work in progress, reviewed your debt structure, and revised your personal budget, you can create an updated cash flow forecast to reflect the changes you've made and also identify periods of increased cash outflow and plan for these accordingly. So, the function of sales and marketing are to generate leads and convert those leads into sales. A poor return on your marketing spend is a key risk to manage. You should track results from each marketing campaign, but bear in mind that there is always a results lag and that some marketing spend is critical to maintain brand recognition and presence alone. You don't want to be throwing money at ineffective marketing campaigns. Whether you're looking at engaging an influencer or setting up and maintaining a new marketing channel, consider what your customers want and where they hang out in large numbers, or you could damage your brand or waste time marketing to the wrong people. Next is your customer retention rate. It's much easier to sell to existing customers, so you need to balance delighting existing customers with attracting new ones. On that note, it's a huge risk to depend on only a few key customers. If one customer provides a significant part of your income, it would have a massive impact on your business if they close down or found a new provider. A low sales conversion rate can indicate key issues with your product or service, as people are interested in your business but don't get over the line to become a customer. This is an essential driver to manage. Providing sufficient training to your sales team is important. They're the face of your company, and if they're overpromising and under-delivering, you'll have unhappy customers and reputational damage. Educate your team on how to sell based on the value of your offering and under-promise and over-deliver to ensure a great customer experience. All of the risks we've discussed so far will have financial implications, but there are other financial risks which the finance department needs to manage. We've already covered poor cash flow within operational risks. Obviously, this is also critical for your finance department. This one can't be ignored no matter how high your profit is. It's also important to put aside sufficient funds to meet your tax obligations. We can help you understand how much you need to set aside for tax. Obviously, inflation and the threat of recession is a massive risk at the moment. Now is the time to prepare for this possibility, and you've already taken the first steps by coming along today. But what you do next will have the biggest impact. With increasing interest rates, you should be looking to reduce debt where possible. This applies to your business and your personal finances. Currency fluctuations are going to impact those who import and export raw materials or goods or provide international services. And finally, fraud is another risk to all businesses, whether internal or external. We've seen substantial changes to privacy legislation over the last few years, with increased obligations on businesses to manage personal information. As we move from a lenient educational response from privacy commissioners to an enforcement response, we need to ensure we're always compliant with privacy legislation. Do you have policies that reflect how you expect your people to protect information and ensure confidentiality? We all know the risks of viruses and phishing scams. As these evolve over mitigation As these evolve, our mitigation strategies must too. We need to regularly educate our team on recognizing potential scams and threats to ensure we're as protected as we can be. Cybersecurity needs to be taken incredibly seriously, particularly if you're dealing with customer data or sensitive and confidential information. As offices move to be paperless, we also need to ensure we have sufficient storage and backups to avoid loss of records or data. These are risks that your admin and IT department need to keep on top of and implement sound processes to protect your business and your customers' data. And the final department we're going to look at is HR. You're probably all felt the impact of hiring someone who isn't the right fit for the business on your time, mind, and financial freedom. Hence, planning to ensure you have robust hiring and induction processes is key. Retention has also been a big issue lately, with businesses struggling to find and keep team members. Developing and maintaining a strong workplace culture is key to attracting and retaining awesome individuals. A great culture helps to ensure your team are engaged in what they're doing and are as productive and effective as possible. Poor management and performance is a big risk in all businesses. When we plan well and mitigate these risks, we can minimize errors and wastage, which is critical in a downturn and beneficial at any time. Employment disputes and litigation can be costly and time-consuming. Ensure you have proper HR advice for your employment agreements and engage an HR specialist when required for performance management or redundancies. And finally, health and safety needs to be constant management, needs to be constantly managed to avoid costly fines, not to mention team members off work due to illness and injuries. So now that we've shared the different categories of risk as they relate to the 10 hat structure, let's look at a tool you can use to mitigate risk specific to your business, the risk register. So how is everyone finding that? Has anybody found one risk that they think they need to manage a little bit better? I know even when I was going through it, I was feeling like, oh yes, there's another risk that I can put on our risk register. It's always good to revisit, and by putting it on the risk register, it helps you to prioritize which ones are going to be important to focus on right now, which ones need to be focused on in a year's time, etc. And that's what we're going to now go through to help you to prioritize which risks you need to look at. So this is an example of what your risk register might look like. This is a simple Excel spreadsheet. After identifying a risk, it should be added to your risk register with a number, name, date, and category. You'll then add a brief but clear description and analyze and assess the risk given the likelihood and consequence of it occurring. Then you can identify the steps you need to take to mitigate the risk and allocate a person responsible for managing the risk. Let's take a closer look at how we assess the risk level. So this table helps you assess and prioritize the risks that need to be responded to immediately and order them appropriately. The risk is rated out of 5 for the likelihood it will occur and the consequence of it occurring. We then multiply the two numbers to get an overall risk assessment between 1 and 25. The higher the number, the more critical it is to respond and mitigate the risk. By focusing on the red and orange areas of risk, you're prioritizing the most critical issues that need to be addressed at any point in time. You should be assessing risk regularly as circumstances change. This register should be updated at least quarterly, but referred to in every monthly director level meeting to ensure risks have the correct priority and are being mitigated as much as possible. The risk register should be considered at each strategic and business plan update to ensure there are goals and KPIs set for managing risk. This is what we do in our business, so we're recommending best practice that we adopt ourselves. So where should you start with assessing and mitigating the risk in your business? Firstly, we need to define where you are now. It's likely your current situation reflects a lack of mind freedom. You lack a clear risk management plan and are feeling stressed about the potential risks, and perhaps there are mounting surprises of warning bells going off. You feel like you're constantly fighting fires, and that could be causing misalignment or conflict between owners, the team, your suppliers, and your customers. So what might the future look like if you take action after attending this webinar? Overall, you'll achieve mind freedom through reduced stress and anxiety about what the future holds. With a clear risk management plan, with risks identified and mitigated, you'll have processes in place to address risks early and ensure there are fewer surprises, reduced conflict, and better alignment. And how do we get that future situation? How do we get to that future situation? We follow a best practice approach. This starts with greater collaboration between you and us. We'll provide you with our risk identification worksheet to establish the critical risk in each department in your business. This is a great exercise to get you thinking about where you should start implementing risk management strategies. If you don't have clarity on your ideal 10 hats business structure, now is an important time to define this. More than ever, we need to ensure we're not neglecting any departments or hats. Then we recommend developing your risk register and committing to reviewing and updating this regularly so you can focus on those risks with the highest likelihood and consequence. Of course, the aim is to build risk management into your overall business strategy. It's about spending time working on your business, not just in it. This means putting your director hat firmly on and making a plan to respond to risk in your business. The more time you put into assessing and mitigating risk now, the better off your business will be if we do experience economic turmoil. We can't remove every risk, but we can minimize the impact they'll have on your business, your team, and you personally. Lastly, having independent accountability will help ensure you follow through on implementing your plan. This is something we are keen to support you with. It may feel overwhelming thinking about all the potential risks in each of the 10 departments, but focusing on one step at a time will have an impact. You're not alone in business, even if sometimes it feels like you are. If you're struggling with anything in your business, please reach out. If we can't help you, we'll help you find someone who can. So, how can we help you? As I said, that this information is just general in nature, and there are several ways that we can help you more specifically beyond today's webinar. Firstly, we've put together a risk identification worksheet, which will help you work through each department and identify potential risks to be aware of and mitigate. If you're keen to set up a risk register, we have an option for a 90-minute risk management meeting. This meeting will help you assess the risks in your business and identify strategies to implement to mitigate those risks and provide a starting point to implement a risk management plan. If you need more support when it comes to being a director of your business, our governance planning service might be appropriate for you. Good governance is the cornerstone to business success and longevity, and it adds value to all businesses, big or small. This planning session will help you separate your governance responsibility from that of operations, document a governance framework plan, and use the risk register to identify risks and mitigate strategies. All right, guys, so we're going to give you all 10 minutes back in your day, so we'll finish off quickly. So before we go, I thought I'd share this quote with you. Make what I always say at the end of our webinars is make a simple plan today, commit to at least 3 actions you'll take as a result of today's webinar, write them down and give each action an owner and completion date. Remember, if you need our support, we're here for you.
Yep. And thanks again, everyone, for making the time to attend this webinar. We appreciate that your time is actually very valuable for us. So please complete the brief exit survey. You can actually click the link there in your screen following this session so we can continuously improve and get your feedback on what webinar topics you'd like to see from us. We hope we've given you reassurance that you can prepare your business to be in the best position possible to weather any storm and achieve mind, time, and financial freedom. Again, thank you everyone from Brew Accounting.
Thank you, everyone. Have a wonderful weekend.